All right, guys, this is the last Sunday scan of 2021. So that means that all excuses are no longer valid after this week. Whatever changes you need to make, you've got to figure it out right now, this week, because 2022 is the year of no excuses. If you already waited to make that New Year's resolution until 2022, you're already behind. So make that change this week. Get ready and make sure that you don't just revert back to business as usual, because that's not going to make you a peak performer. You need to focus on where you lose the most money, where most of your stress comes from, and everything that you don't like about trading. You need to focus on that, and it's going to be a more positive experience. One of the things, for example, for me, I stopped trading a lot pre-market. There's no point, right? I'm looking for that macro big trade. I'm looking to do less and make more. And I used to always get up early and I still do. I still get to borrow and get prepared for the day. But I am not as aggressive about getting positioned or having that fear of missing a trade too early. I'm not worried about it. I don't care. The second that I put on a trade, that's it. My day is now. Here I am. I'm at the desk. I'm glued to the table. And you have that choice. You can make that decision whether you want to be at that desk at that time or just wait. And if you just wait until 9 a.m., 9:30, doesn't mean you can't be there making a trade plan. But without getting involved, without already putting on a bunch of positions, you now have the freedom to do whatever the heck you want pre-market. You can go for a walk. You can play with your kids. You could be a lot more involved in whatever's happening pre-market versus being glued to your desk. So that was one big change that I made, one that I enjoy that impacted me positively. And it's not even monetary based, right? It's just about, everybody is so focused on success being a number, and it's all about money, money, money. But really, you will find out that it's not. You can have a whole bunch of money and you can still be really unhappy. So it's really about finding out what makes you happy, or most importantly, what is it that brings you down? What is it that you don't like? And just avoid all of that. Shut out all the negativity, shut out all of that, and just focus and surround yourself with like-minded, positive people in 2022. So like I said, this is the last week for making excuses. You can always put scotch tape over whatever it is that you're doing, but eventually, or even duct tape, but scotch tape is probably a better example because it doesn't stick very well. But it will hold something for a little while. But at some point, it's just going to fall off, right? And it's going to revert back to whatever it was. So if you don't put your finger on what that is, you're never going to fix that crack in your foundation. You have to be honest with yourself as to why something did not work out. And if you're not, then it's never going to get fixed. And at some point, it will always catch up. And it's so important to really be honest with yourself. And most people are not, because we can always find an outlier reason as to why this did not work out. But it's not the true reality. It all comes down to us and the choices that we made. Perhaps we were oversized for the liquidity. Perhaps we made a lot of bad choices knowing what the risks were, and it just didn't work out. And unfortunately, sometimes we get rewarded for being reckless. And that's one of the biggest things that I think a lot of people have been rewarded for 2 years for being reckless. And as you saw on all these momentum trades and, not necessarily the indexes, SPY and all that kind of stuff, but a lot of these other outperformers, these stocks that were up, monster, everybody just lost 50% in the last couple months, on all these high flying names. So being right is great, but you need to be right for the right reasons. Otherwise, eventually it's going to catch up. There's countless opportunities every single day. Every single day, there's opportunities, no matter whether you're long, whether you're short, and it's all about, right now, for me, it's the nail and bail, smash and grab kind of mentality, but on a more macro level. So as you guys know, I look for the big picture and I look for the full day trend. But although, nail and bail kind of, in my eyes, means, it's a micro mentality, in and out. But I'm talking about, you get a good entry and 15, 20, 30 minutes later, it stops going down. You need to listen to that, right? It's there. It's telling you we're not going any lower, but yet you're still full size. So one of the big changes that I've made over the last probably month and a half or two is size down. Either size out or size down. You can always re-add. If it stays heavy, you can always re-add. But a lot of times you'll see these start to rebound back up. And the reason for that is there's just so much volume that, these buyers come in, these shorts come in, it comes back down, it holds. There's so much demand that it forces the shorts to cover throughout the day. And maybe it doesn't squeeze, but there's enough of a buy side liquidity to just keep these stocks sideways. So that intraday trade is now minimized to, maybe it's only an hour or two of a downtrend before it starts to reverse back up, right? But the trade comes the next day, but it's not on your timetable. And that's been one of the biggest changes because I really like to get on the right side of the trade and just let it work. But see what happens. But that's what's working right now. That's what I'm prepared for. Long, short, doesn't matter. I've been going long plenty of times. I've been going short plenty of times. But the biggest thing in this market is not to step in front of a move. If you do, you will get swallowed. So make sure, especially lower float type names, especially things with 100, 200 million shares, do not fight the front side of the move. If you do take a trade on the front side of a move, you must have proactive covers. What are proactive covers? Proactive covers are you anticipated the stock to potentially pull back at this particular level and pull back. So now it's your job to be proactive with those covers. Stop thinking about whether it could continue to go down. You just took a piece out of the stock that was going straight up and it flushed down. That's your cover spot. And then if it stays heavy, you can add back. But if it doesn't, it's going to go back up just as quick. And there's a better chance that you're going to get stubborn. There's a better chance that you add into that trade. There's a better chance that you overstay. So that leaves a very good chance that you're going to get blown out and just be one of the shorts that are getting squeezed. So if you're not good at that trade, leave it alone. Pay attention to the key levels. Every single day I post the key levels. What makes it a good trade? What doesn't? A lot of times you'll see it come right back to that level, go right under it, come right back up, confirm, and carry on. We need to see confirmation, failed follow through. If we do not see confirmation or failed follow through, the sentiment has not shifted. And therefore, you must assume that it's going to continue on. Because in this market, things just keep on going until you give up. And because you're exhausted, you miss the trade. And personally, for me, I'm patient. So I hope more and more and more people get exhausted because I won't be. So anyway, let's get right into Scan for the week ahead. And again, I hope everybody had a great holiday, a Merry Christmas. I truly appreciate you guys always watching these. And like I say a lot, it really does help me because I'm verbalizing my trade plans. I'm verbalizing what works, and it reaffirms and firms up that foundation of doing the right thing over and over and over again. And if any of you guys are having trouble, just remember, if you've had success at this, don't let one day or 1 week, really, get you down. Look at the big picture. Look how far you've come. And the sooner you go back to business as usual and what was working, the better it's going to be. If you change everything up because of one outlier event, then it's not going to be the same recovery that you are hoping for or expecting. You have to go back to business as usual, what has worked, and continue on. All right, guys, now for the second part of Scan, this is when I go over my trade plans, what I'm kind of looking for the week ahead. So, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut it off. If you're good with that, and you understand that this is sort of how I prepare, how I think for the week ahead, then I think it is a great way to start your week and get a little bit of a jump start on what could be potential plays for the week ahead. Once again, one big suggestion that I would have, I always talk about the key levels, goalie pull type situation, stuff move, and a lot of people sometimes, if it's the first time watching, they haven't a clue what I'm talking about. So one of the biggest things I think, or the benefits, we've got the momentum room, which is just all business, no off topic, trading room at Investors Underground. And then we have the Traders Lounge, which is, whatever goes. It's all off topic. And we always talk about the key levels, the traps, the spots to kind of keep an eye on. And I always recommend recording. You guys can download all kinds of different recording softwares. And I have some recommended ones that are on the FAQ page. But what I would say is seeing these things over and over and over, they're always a little bit different. But you don't need to trade. Most people want to trade, want to get into this particular trade and just try to figure it out. But a lot of times you could just press record. And instead of winning or losing on the trade, there's no risk. And you can go watch it back, and start to develop an edge for when you see it yourself. Oh, I saw that before. Last time it did that, it did this. And a lot of times you'll see that it's all the same situation and what to watch out for. So if there's a stuff move, which personally I define as a situation where it ramps into a particular level, an offer. The offer does not budge. You see a huge amount of volume go off. Typically, the offers are hidden. Offer does not budge, and then it ends up, slamming down. That's a great thing to record because there's two situations that come from that. You either get the stuff and it slams down, and then that's it. It remains heavy, or stuff slams down a little bit and they absorb it. And that's been the biggest change over the years, where this stuff move is actually the trap in itself. Everybody comes in, shorts, huge seller comes out, all of a sudden they're just rebuying everything. And that's the trap, and then it continues on. Then we also have the goalie pull that we talk about all the time, situation where they create this sort of ceiling, and whether or not they pull the goalie and slam right back, and the goalie comes back, right? They put the seller back in. Or if that ceiling becomes the floor. And those are the two situations where you can quickly identify where your risk is. Are we in a situation where it's getting a little sketchy and it looks like it's going to squeeze? Or did they just screw all the early shorts? There was an exhaustion move and the seller's back. Those are all things that you can do risk-free. Recording. No trade, just recording. And go back through it. So I always point them out. Sopa, S-O-P-A, and BFRI were two examples that we talked about in depth Wednesday and Thursday, even I think Tuesday. The key levels and how it reacted at certain levels, and most importantly, the key spots for proactive covers. Anytime you're trading the front side of the move, if you are not proactively covering, you should not be trading. You should not be trading the name at all because that's not the way to trade the front side. At some point, it's going to catch up, and you're going to wish that you hadn't done it. So let's get right into it. BFRI came way in after hours. They had a 424 filing after hours. We'll see. I mean, maybe it just kind of snuck out there on Christmas Eve and then ended up coming back and they retrap and maybe it's nothing to worry about, or maybe that's they just killed the squeeze potential. So we'll see, but. I would say the key levels for me is this little line over here, this 1260 to basically 1270 range up to, I would say 13, right? So if I were to put two lines in, I would love to see this kind of hang on in the morning and then maybe push back up towards these levels. And I think that we're going to run into a little bit of issue. Right over here, you can see 13 was sort of that base. And then it becomes the top at about 1295 or so. So you call it 1295, 13 for ease. And then this 1260 line obviously was the key line of support over here looking left. So I always like it to kind of push check in on anybody that's kind of aggressively short, see how they react, and if it stays heavy, then I look to participate. But that's been working exceptionally well, and that's what I'd be looking for on that one. Big squeeze, and this is another example of like I was talking about, nice opportunity over here. This exhaustion move, it literally went from 10 to 12.50s and flushes out almost to 11.50. So you almost have $1 per share pullback, but you had about 20 minutes, and if you did not lock in, it proved to you that it was holding. It had, and I'll just draw it so you can see it. It had all higher lows, and anybody that decided they were going to hang out and fight this thing, ended up getting popped over 12.30s, right? 12.30s, 12.50s. So you had this entire time. So you had 10, 20, you had a half an hour to make a good decision before you ended up going red on the trade. So these are the kind of signs that if you are trading the front side of the move, and say you were trading this move over here, and you are still short here, and you're trading it incorrectly. In my opinion, it's fine. It might work out sometimes, but you're going to be being rewarded for doing something reckless, and that's not what I'm about. So again, just remember, if you are trading the front side, be a proactive cover until things start to come in. GRTX has been hanging around. I feel like a lot of people have been swinging this one short, is just my feel. We've had a great volume day over here. We had a great volume day over here. I think this was actually the trap day. And the reason I say that is because it's got that big candle and then it just comes all the way back down, right? So it's kind of like, all right, blew everybody out, nice weak close. I'm going to swing this thing short. And then you can see the wicks that we always talk about. And here we are. So I would love to see this thing continue on. Maybe have a blow off move. It's going to be one or two things. One, power open, squeeze everybody out, or some type of weak open and then squeezes everybody out. I don't think that it's going to be done until we have that exhaustion move, just based on the volume, looking at it and seeing how it's reacting. So I'd love to see this thing pop through 5 and really push either mid to high 5s, and then I will be interested. This is going to be a great trade this week. It's very important to not step in front of it and not ruin your chances or pre-exhaust just because you're afraid to miss out. Remember, these things have such big range. You don't need to be in at the top, right? You could end up being 50 cents, $1, $2 too early. But we've already had this move from 150s all the way up to almost 5. So you're not going to miss the trade over 10 cents, 20 cents, 30 cents. It's gonna be a nice move when it eventually exhausts out. So be patient. PFE has been a great daily driver. Every single day it's offered some type of opportunity. And looking left, looking at key levels has been just a great way to kind of anticipate what makes a good entry. We talked a lot about the key levels in the room, but just look at this line here. You can see it keeps on coming back to that level. You can see over here, even late day, looking left, it met up with the same area over here before it ended up fading off. So, you can go back to a bunch of different days as well and see that it pretty much kind of held in between those lines as well. And this is the way to trade this type of stock, is just to kind of figure out whether or not you are within a channel or you're starting to have that outlier action. So whenever I'm within a big channel, as it gets closer to the lower end or the upper end, I am exiting all, if not most, of the position, because I don't want to anticipate that it's going to break the channel at that given time. If it does, then it's probably going to have the outlier move, and I can always get back in. So, failed follow-through section is typically the section that I'm looking for potential breakdowns and things like that. So Sopa, I think you can kind of, or not Sopa, Sopa's next. LCID, you can see that all the pops so far have been staying pretty heavy, and we're at a base here at this 37 range. So if we continue to stay heavy, and we break that 37, I think we can push down towards 35 and maybe even the daily view up. I think there's a lot of long stuck on the wrong side of this trade. It went from a very short crowded name to a super long crowded name, in my opinion. And at this point, it looks pretty terrible. A lot of it's gonna, we should probably be watching RIVN and F and NEO and just kind of get a vibe for what's going on in the overall market. Look, if Tesla continues to break out and it goes to highs, then LCID might end up holding pretty well. But nice bounce on this thing for sure. I mean, this thing came back so quick, pretty crazy. Market as well. Market went all the way back up to the highs. I mean, there's no reason to have that conversation about what if the market pulls back, how are things going to change, what if we're in a bear market, all this kind of stuff. Every single time we have those conversations, we're right here, it goes back to the highs. We're right here, it goes back to the highs. Figure it out when we need to. But for now, Tesla's a great example of the craziness and how fast it can go back. So all of these ideas, LCID and Fs and all that, always, you got to kind of have an idea of what the market is doing as well. Moving on to Sopa. This one was fantastic. Nice way to end the week last week on the Thursday. 1620s was the level that I had given in the room. And you can kind of see, I was pretty much based at the 1580s, and 1620s was right over here. 1620s was the level from the prior day. We talked about it in the lounge. You can see 1580s to 1620s. And that was sort of the level that it was holding before it started to continue on its push towards the close. And then 1580s being the other level of support. So you can see that it came right back into those levels. And like we always talk about, you don't want to assume that just because it cracks them that it's over. That's no confirmation at all. It's all about what it does when it comes back. And in this case, it just blew right through it. But we want to see it come back and fail, come back and fail, come back and fail and fade off. This is the first test back towards that key level, right through. So higher the better here. I'd be using 1620s, that same level, as a guide. Hopefully it gaps up, but we'll see. I feel like they blew everybody out. A great trap, great volume. Volume's still relatively high, so we'll be able to tell. If you look at LGVN, you can see how fast, when the algorithm or I would pretty much call it that, but when they were done with it, you can see how fast the volume just was gone, right? So you've got this day right here, 100 million, 99.9 million shares. Next day is only 20, 13, 6, and now we're back into like sub 1 million shares. So very similar situation. I just think it's a big fund coming in, pushing a button, creating this liquidity, making you think that it's more liquid than it is. You short more size than you typically would, and then it ends up being thinner than you thought. And, here we are, repeat. And we had the same thing on the CNSC, another liquidity trap. And you can see the volume here, these 2 days. And you can see that pretty much right over here, shorts never got let out, right? So you had this huge volume day, another big volume day, even bigger, but it held over that liquidity trap day, and now they blew everybody out. So in my opinion, whether or not this holds on, we'll find out, but in my opinion, they blew everybody out. And if that's the case, then I'm interested cautiously off pops that fail. I'm not interested in trying to find the top on a situation like this, but another great example of a liquidity trap. Then we've got SEAC. This was fantastic, huge gap up. They halted it for the news. They gave a fantastic trade. You guys saw that one. Faded that one, figured a round trip. I'm thinking at this point we go back towards the 150s. So we'll see what happens. We did have a lot of volume, 200 million plus. So if it pushes towards 2 on Monday, Tuesday, that's great. But then looking for failed fall through momentum. Let's see. Continuation side of things. TRT, so far so good. You guys know this one. This one's been on Sunday Scan for quite some time. I first participated over here. Had a nice breakout. We talked about these wicks. Overall, the market obviously came in, so sometimes the momentum gets hit a little bit, but they started to firm it up again, and we obviously were talking about it the last couple days in the room. I added into that position, and so far it's nice, quick 35% move on that thing. PTPI, you guys can see the trend line that we were talking about in the room. It's pretty much been holding that same level the entire time since the initiation of the swing trade. As you guys know, I had traded this first move, then I ended up bag and holding a bunch, had added into it, got bailed out, and then, since then I've been carrying a sizable core. You guys saw the exits 510 plus on this day over here. That was a very standard looking left kind of situation over here, right? So you should assume that it's going to have trouble with that level. Came back up, 490s had trouble, 480s had trouble, then faded off, and then they ended up raising again. So once again, it's just like NNDM. I had compared it last week, if I can go back there, to NNDM, where I was involved in this trade, and it was, I could tell that there was a buyer in the tape, but it was just the most exhausting trade ever, because every single time it was about to go, they raised. And I think they raised maybe over here, maybe again over here, and then again over here. I don't even remember what it was, but actually, no, you know what it was? It was this day here, and then I think it was this day it closed real strong, and then they raised again, and then it just continued to go on. So it was a pretty crazy move. And again, I'm not saying that PTPI is going to go to 12, but I'm saying that it's very similar to this same situation that happened there, and they're doing the right thing, raising capital, I guess. But, for me, same plan that we've gone over every single time. I've still got my core, but I'm shaving off anytime there's a huge move. We had 50, 60, 70% move or whatever that was that day, which was phenomenal. So it was one of my better trades of the year. Shaved off some of it, shaved off a little bit more, 470, 480s, and we had that flush under 3. So reloaded back up into that trade, took off the day trade, but I held the rest that I replaced the sells from. So we'll see what happens with it. But again, if you're not trading it, if you're not selling into the rips and you're just kind of buying at these levels, you probably want to see it set up a little bit better first. But you can see that it held that trend line that I went over. CPIX, same deal, potential liquidity trap. You've got the volume here, 200 million. We've pretty much based that day. So there's no real chance for shorts to make money. They did get blown out this day. Maybe they put some back on, but the liquidity wasn't there. So if it continues to hold, we have a potential, and you want to be cautious chasing for sure. But so far, so good. This has been an idea from this day over here. And, as you guys saw on scans last week, the same idea. So, we're about $1 off the 4s, a little bit higher. You should be locking in along the way because, it could end at a moment's notice. But be smart along the way and don't do anything silly. EFTR, I've been talking about this one, but I did not participate at all. I had a nice move. I'll be watching it. Hopefully it continues to head higher and higher and higher. And then maybe we'll get a ARQQ type opportunity or FCUV type opportunity. Kind of reminds me of that. So it might be one of those that just kind of inch, and then it has a nice knife candle. Last but not least, Sgma. Really nice swing trade that other day over here. And if you guys remember, we went over it and I had posted the exits. Some of it in the 15, 16, 17s, and even as high as 18, I think 1840 after hours. But my goal was to replace those exits and, potentially reswing it. So I put on a few of those. You can start to see that the buyers coming back. It rechecked in with the daily VWAP level. But I don't love it unless 12 starts to firm up. I'm not going to oversize, but I did replace some of those exits from those original $10 swings. So that's my plan for the week ahead. I'm not going to be, coming crazy aggressive on any particular names. It's really been about having big picture ideas, which I think come from scan, and the confidence or the conviction comes from scan, because you've gone over it, you're familiar with it. But lately it's just been, what's moving pre-market. And, there's been like 5 or 10 every single day that are all good potentials, good liquidity. But for me, I take stuff off scan, I take stuff off of scanners in the morning pre-market, and I focus on liquidity. I focus on where the best potential is, because we can cherry pick the best plays right now, right? There's so many different opportunities. So you shouldn't be trying to trade them all. You should be picking the best ones out of the bunch to focus on. And for me, that's the most liquidity. The ones that have the most volume and the most range are going to be the best for me. I'm not looking to trade something super low float that, has 100,000 volume. That's not me. I can't size into that. I can't trust a market edge in a situation like that. So for me, I just wait for my setups to come to me. It's been working. Things have been excelling, exponentially growing into the year end. And, I'm just going to keep on doing the same thing over and over until it stops working the way that it is. So keep your head clear. Make sure that you're fixing all those mistakes that you made throughout the year. Be honest with yourself, and we'll see you in the room tomorrow morning.